Hello everyone. Today I just wanted to do a slightly different kind of video. Um, Basically, the topic will be to really talk about whether we are going to a new low. Traditionally, September or rather seasonally, September is a down month, according to most of the stats. So I think many people or many traders are now wondering whether there's a possibility that we will see a new low in all the US indices. So today, I wanted to share with you what I am monitoring to see for myself whether there's really going to be a new low coming. So here I have on my screen the US 500 chart. And what has been happening is that for the whole of this year, trading has been very, very difficult. You can have um a sudden down when this happened. I think it really caught some of the less experienced traders off guard, and then after that there was a big upward move, and then it came down, then it was up and down, all over the place. So typically what happens is that I think in general I would say that this year has been very, very tough to trade. Yeah. And so that's why I wanted to start this channel in the first place, because I think for traders who have come into the market in 2020, basically the market was very, very easy to trade. After a small pullback, usually you will see a high upward run. But actually, those good times are already over. And that's why I think this year many traders have started to see themselves losing money, just that they probably don't really talk about it. But I think the reality in this world is such that whatever goes up will come down. And what really makes yourself and myself a better trader over time is that despite the volatility, despite the ups and downs that frustrate us, we will become a more experienced trader. Just like a good sailor is always one who have experienced rough seas. So I think right now is really a very tough time for all of us. And that's why I wanted to start this channel to be in this journey together with all of you. Yeah. And without much further ado, I just wanted to share with you that there is this financial ratio that I am now monitoring. So yesterday, what happened was that there was a new low that was being created. So basically, what happens is it took out this low and it took out this low. So now we are like in the golden pocket, or what I call a very strong support zone. So right now, you actually see that um, this candle is like being supported lah by this zone that I'm drawing. Of course, one of the things that we've learned along the way is that prices don't get support and resistance at a certain line. It's always a zone, or rather what we call a rectangle box. So anywhere in the zone, whether is it a support or resistance, that's when we either see prices bouncing off if it is a support, or see prices get resisted if it is at a resistance. Yeah, so now we are in this pocket zone, and tonight is quadruple reaching. So I think there's gonna be a lot of volatility. I have previously entered some trades, but I might not be entering more trades tonight, depending on how the situation goes. Yeah. And why this quad reaching is a little bit more volatile than normal is because we are also coming to the end of September, which means there's going to be a quarter close. So this month's options expiration is actually more crucial than all the other months. Yeah. Um, so why are quarter closings important and more volatile? That's because you realize that a lot of fund managers out there actually manage their portfolios on a quarterly basis. So whenever there's any rebalancing to be done for clients' portfolios, they are normally done on a quarter basis. So how this month closes will be very important. So that's one. Second, It's also going to be very much volatile because I think everybody is also waiting to see what's going to happen at FOMC next week. I think now market is trying to price in 100 basis points rate hike. That means the possibility of a 25 basis point rate hike is no longer there because of the CPI data. Um, yeah. So I think we are waiting to see lah what will happen next week. So nevertheless, because of this new law that was created yesterday, I think it created some fear in some traders and slash investors perhaps. Yeah, as to whether or not we will go back all the way down here. Let me do this. Shift the line here, or even here, or go all the way much lower and get flushed down. So I think nobody knows. Yeah. So basically, what I'm monitoring is actually this particular financial ratio. Let me show it to you. So actually, it's the IWM versus the SPY. Yeah. So what happens is that a lot of the bigger institutional investors don't actually trade on the lower time frame. Lower time frame meaning the H4, the H1, the 5 minute chart, the 15 minute chart. They usually look at higher time frame analysis. So over here, I actually want to share with you what I saw if I go to the weekly charts. Okay. So basically, this is what I have been seeing. Of course, if you were to like scroll and see the back data. So this is generally how it looks like. But I think it may not be useful because I think as traders we are looking at current times to see uh, how it can actually help us. So I think I'm going to go back to 2020 when the whole COVID thing actually started. Yeah. And why I like to look at IWM is because IWM is actually the most traded ETF when people want to go into the US 200. If let's say you're not trading into the futures market, and being the small cap ETF, right? Usually, if there is any sign of danger in the market, the US 2000 will usually drop first. So actually, back in, for example, right, if let's say I go back to US 500 or which is the futures market for SPY, you would realize that actually before this massive drop in SPY or in the US 500, right, actually the US 2000 already started to drop. Yeah. So if let's say you were to go to the US 2000 charts, it was actually already since January 2021 starting to form this Wyckoff looking pattern. So then you would probably see this as the U-tap. So actually when the market got flushed down here, it was a very clear sign that we are likely to hit lower. Yeah, and that was during the November period. So even before November period, US 2000 was already going sideways for very, very long, since January till November. So in when it was stuck at this range and when this U-tap happened, actually that gave us a signal that really something disaster was gonna come. Yeah. So actually that helped me to realize that in for this year, since the start of January 2022, I knew that we were not going to go into a good time. Lah. Yeah, or rather, it's going to be a very difficult period. Yeah. So that's why I like to monitor the US 2000 movement. Yeah. So what happens is going back to IWM versus SPY. So this is what I'm seeing. So let's say if we go back to the time that was during the COVID period. Of course, when COVID struck, it really took a lot of us by surprise. For traders, maybe no, but I think I myself was caught off that the financial collapse came because of COVID. Lah. But I still feel that at that point in time in 2020, market was already very high. So I think we were due for correction. And I think if you guys were checking your technicals in 2020, you might have known that a lot of things were already showing divergence. Yeah. So in any case, what I wanted to share with you based on the weekly chart is that in 2020, actually US 2000 took off around here. Yeah, which is around the week of 28 September after it consolidated for a while. So this is actually this particular line or zone, perhaps you can even draw a box here. Yeah. It's a very, very crucial support zone. If this breaks, um, it is not going to be very good for the economy. So what happens is that after all that um, drop that you saw in US 500, US 100, which is the Nasdaq, and even the Dow US 30, actually this has been a very, very strong support. Yeah, that has not been broken. So given that there was an attempt to um, close lower, but actually it didn't on a weekly basis. So the people who actually try to short here probably got very disappointed. So I think this was like a stop hunt kind of thing that people got taken out. Yeah, after that, and that was in probably around May of this year. Since then, right, this financial ratio has been hovering on this support for many, many weeks already. Yeah. And then what happens is that right now, I am seeing this other intermediate support, which is around here, or this zone as another the next support. So what happens is if this week it is going to close like that with this green candle, there is a chance that if prices can continue to go up until here, which is the next resistance, or even hover around here as we enter into next week's FOMC and in the months to come, right? Because seasonally, end of October to November, December are usually the better months for traders. That means you will start to see that the market will go up. Yeah. Um, but because seasonally September it is a weak month, so I don't think you will see upward thrust so soon. That means from now at least until the end of September or even mid October. And plus, this year is also a midterm election year. So, according to stats, during midterm election years, there is a chance that market will go to a double dip. But even if that happens, I do not think that there will be a new low that will be created on the US indices. That's my view. I'm not sure. That's my guess at best. So what I'm doing is monitoring this particular support zone. If this financial ratio can continue to stay supported here, I have a very strong feeling that we will not see a new low. In fact, once this is able to close above all these zones, that means if I were to mark, let's say, even another line or zone, okay, let's see here. Yeah, so over here, okay, where you will see a high here, here, which can act as potential resistance. So if we eventually see a break above it and can close that weekly close, or even 2 weeks of closing above it, then I think we are in for probably another bull run. For how long, I don't know. Yeah. So this is what I'm closely watching. There are also other financial ratios, I mean, other ratios that you can look at. For example, you can look at the QQQ versus the SPY. Yeah. So over here, you could actually draw a very, very long term trend line. Okay, let's say if I go to a monthly chart, might be easier. Yeah. So if let's say you were to draw a very long term trend line, probably around here. So we try to draw the best fit. I mean, we can't draw the best, but we try to draw the best fit. Actually, the QQQ versus the SPY, it's still not that bad actually. Even though you have seen the US indexes corrected so much, but actually it's still very far from this trend line. Okay, let me go to the week chart and see if I can draw something that is better. Okay, let's see if I were to adjust this. Sorry, let me try again. Yeah, if let's say I just take the more recent data and let's say I ignore all this. So basically what happens is that this particular ratio is still slightly further away. Of course, my lines are not perfect, for sure. Yeah, but what I'm trying to share with you is that actually things may not look as dire. I think there are just too many bad news in the market right now that there's gonna be a big market crash and there's gonna be a great depression. I don't, but just there's just an overwhelming amount of bad news that is causing a lot of fear in the market. But I think when I look at ratios, actually things do not really look that bad. Yeah, so I just wanted to give a bit of more balanced view because I think as traders we need to be neutral and open to the idea that as much as there's a lot of bearishness in the market and it makes sense to short now, we also need to be open to the other side of the argument, which is after all this, there could be bullishness that will still be coming and not that everything is so dire. So long as we have stats to back us up, something that we feel can help us to make some kind of logical conclusion, then I think that's what helps stay the traders to stay focused, and stay objective. I think that's the main word, to stay objective. So especially when there's so much recession news in the market right now. But in any case, as traders, we are trading price actions most of the time. So I mean, so for me, this is a particular ratio that I'm looking at. It has worked for me in the past. I think it will continue to work for me. So long as I do see that prices are being supported or in this particular zone, I think I am more inclined to think that we are not gonna go to a new low. Of course, I may be entirely wrong, and of course, this video is not meant to be any kind of financial advice. It's just to share with you what I'm looking at in terms of the charts. And if it works well, then I think uh, perhaps end of the year we could still see some kind of bullishness. And I feel that inflation actually will continue to come down. This is just my view. And one of the reasons why I say that is because I have been also monitoring the commodities market. Um, I really feel that um, things like oil is coming down, things like natural gas is coming down, which is causing a lot of concerns. Of course, if you were to compare oil and natural gas, oil has already started to come down. Yeah. And I think natural gas will be the next that will come down, but it's not so obvious now. But if you look at the daily charts, actually, it is showing some kind of signs. Yeah, I think we are still at the early stage. So if it happens, I think this could be a potential head and shoulder pattern. If it really forms and breaks the neckline, then we have all. I mean, it will probably come down all the way. That's my guess. Um, and I think with natural gas and oil coming down, with commodities coming down, I think there is a high chance that inflation will continue to come down. Yeah, and if let's say we were to look at other soft commodities, let's say like the wheat, you see it has already corrected, which actually I have done a few videos previously in my channel to share with you guys that I already started to see soft commodities coming down. Yeah, so wheat prices are at the level before all the war news broke out. Okay, the Russia Ukraine war news actually broke out on 24th February. I still remember that because prior to that I was actually trading the soft commodities where it was at a certain support level. So I was waiting for this to happen. Yeah, so I went long. So of course, I think with the news, it helped my position to move. But after that, when I saw this parabolic move, right, I was no longer interested in longing the market. So I actually exited, or rather took profit halfway through. Yeah. So because there's a chance that usually when there's a parabolic move, yeah, things will get flushed. So Yeah. And that also